are in listen-only mode.
Hello? Hey, Heather. You, you try yourself. Hi, sound test. Hi, good morning, everyone. Sorry for the delay. We had some technical issues. Yes, the webinar is starting now. This week will be a short webinar. We apologize because last week was an earnings season and we didn't come up with any new initiation. So what we'll be sharing on today is uh, what we saw on the ground last week, and this will touch mainly on Indonesia. So Indonesia, just a quick recap. Last month in April, our macro site actually downgraded Indonesia to neutral. And two of the key pointers we learned was a weak domestic demand, as you can see from the chart on the top right, as well as borrowing costs remaining high. So when borrowing costs remain high, the issue is that businesses that wants to expand or wants to do investments are unable to do so, and borrower they face a high borrowing cost, and this results in them not expanding as fast as they would like to, and this leads to fewer jobs for the consumers and lower purchasing power for the consumers. So what this meant is, on a ground check for the 10 largest consumer companies listed in Indonesia, they actually recorded their lowest quarterly sales since 1Q14. And this was on the back of two key reasons. One was a fuel price hike that happened in November. So the government wanted to reduce subsidies, and they actually reduced subsidies, and this resulted in about 30% fuel price hike for consumers. And the second point is a depreciating Indonesian rupiah. So the rupiah year on year has depreciated about 13% since last year May. So this is against the USD. So when you combine these two factors, just imagine it as, in Singapore, where suddenly your fuel cost goes up and your Sing dollar weakens, you'll be spending less out in the market, and that's what's happening in the Indonesian as well. So because they're spending lesser, this is why the consumers companies are getting lower sales. And one key company is Astra. So Astra is actually a subsidiary of Singapore listed Jardine CNC. Their quarterly sales was down about 9% year on year. And these factors have translated to the lowest consumer confidence index since October 2013. So that's about 1.5 years ago. And it's now hovering just about about 107. And this is the lowest since October 2013. Now, Indonesian is historically one of the more positive ASEAN countries. As you can see from the chart, in the last 1.5 years, it spiked up and has remained pretty healthy since. But so this coming down so drastically is actually quite a big deal for Indonesia. And in Singapore context, the two companies that we visited last week in terms of their earnings briefing, one was Jetfa. Jetfa sells poultry, chicken. They also sell milk. In Singapore, there's a brand called Greenfield, if you see in NTUC, so that's produced by Jetfa. And Petra, their main is a chocolate manufacturer. Their main brand is Silver Queen. You may or may not have seen it in Singapore. So for Jetfa, their sales for poultry was down about 6%. Consumer food is down 12%. For Petra, their sales in Indonesia was down about 17%. And both highlighted weak consumer sentiments that they see on the ground. And this is impacting not just, as you can see, it's not just one industry, whether it's food, chocolate, whether is it motorcycles, which is Astra. So these are market-wide, slow in demand. And when we talk to them in terms of their outlook for April, which is 2Q, as well as moving forward for the end of the year, they don't seem too positive. Of course, they like to think that the market may turn around, but neither of them can point to you where exactly is, or rather what going to be the factors turn around. However, one thing that they did bring up was the reduction in government spending. So recall in the earlier slide we said that the government wanted to reduce their subsidy, and this resulted in a 30% hike. So that figure is estimated to save the government about 100 trillion rupiah. And based on our talks to the China checks of talking to CEOs and all, they think that the amount that's spent so far this year may be only about 7 trillion. So that's only about 7% of what they can potentially save for the year. So this means that the government is reducing their subsidies for the consumers, and they're not directing that funds into investments that can spur, the growth of the country. So looking ahead for this week, One other counter that is exposed to the Indonesian side is Golden Agri, which is reporting their earnings tomorrow. So the bottom line is we are a bit cautious on Indonesia, but one thing to highlight is that our take on Indonesia is quite against the grain, because when we talk to our Indonesian offers, they seem rather positive about it. So we hope to get more data points to be able to give you a better picture of what's happening over there. And looking ahead for this week, the few companies that are reporting, we highlighted a few big ones. Singpost and SIA Engine is coming out on Tuesday. So Wednesday is ComfortDelGro. On Thursday, you're going to see SIA, Singtel. Friday is StarHub. So that's the end of our presentation for today. I know it's a bit short, so we like to open the floor a bit earlier to Q&A. So yes, please start with the questions. Thank you.
Good morning. There's a question on Indo-Agri. The question is, are they badly affected? If you look at the company, and it has two sides of the business. It has a retail business, which it sells cooking oil, and then it's the plantation side. It's the plantation side that's very much the bigger part of the business. And if you look at plantation businesses, those numbers are very much known in advance because we know what the yields are. Those are announced monthly. And you already know what the prices are too, because CPO prices are publicly traded. So as expected, you're seeing across the board a lot of plantation companies reporting weak numbers, approximately down by a third as far as the earnings. You saw First Resources report that but Indo-Agri's numbers were quite weak. So that's not a surprise. And we're already, partway through, or more than halfway through, or this quarter, so this will perpetuate into Q2 numbers. But the markets are forward-looking, and it's all about what future yields are like and what future prices will be like. We're looking for prices to be pretty much near the bottom. Markets are factoring in soybean prices, which are still, there's a large glut of soybeans right now.
Hi, Benjamin here. There's a question on any surprises in the Sarin's earnings announcement. So Sarin's released their first quarter numbers last night. But in terms of the numbers wise versus the expectations, everything was in line. So earlier on this month, remembered that, it's in April, right, they released some profit guidance, right, because the industry backdrop was quite bad, which has been actually quite prolonged over the course of last quarter in FY 2014 as well as into the first quarter this year. So manufacturing activities has dropped quite significantly in India. So when the activities come down, right, usage of equipment and services for Sarin will fall as well. So during the earlier part of April, the guidance was made, and we issued a report as well mentioning about that, which we expected the year-on-year decline to be about 50%, right? So the numbers came out today, and indeed the top line is down about 50%, right? We actually expected more of a break-even quarter, which was around plus minus 500k. So the results came in today, and the bottom line is slightly better than expected, but nothing to be too focused or worried about. So currently, the things that we are looking at going forward will be how the trade show in Las Vegas at the end of this month is going to turn out. Right. So earlier on this month, there has been an auction for the rough diamonds. So as of the data as well as news that we've got so far, right, there has been some reduction for rough diamond prices, and demand has picked up slightly for the roughs as well, right? But I don't think there is still enough to make a concrete judgment as to if the situation has already begun to turn around. So we are actually talking to the management this afternoon, and let's look out for a report on updates on the industry by tomorrow when the report is out, right, after we talk to the management. So some things to keep a lookout for is again whether towards the end of May will we see some pickup in activities, right, and if the situation will turn around, right. So for us, we don't expect it to turn around this quarter, but we might see some pickup towards the mid of this quarter, right. But likely to be so, we'll see activities coming back in the second half of 2015, right. So I think a lot of the orders as well as demand for the services has been backlogged, so that should come back in the second half of 2015 for Cyrene itself. So I expect the results to start turning positive in the second half of this year. Thanks.
Okay, there's a question on the latest China stimulus where they cut interest rate during the weekend. What would be the impact that will be on China's equities market? Actually, this rate cut has been widely expected. Even so, after the inflation data as well as the trade data, which came in last week, bigger than expected. So after the rate cut, that actually supported the stock market today, which went up quite a bit. And as mentioned earlier, that if the real economy is not catching up, the slower economic growth as well as the capital outflow would be counterintuitive with the rally in the stock market. So upcoming, we should be monitoring on whether the economy is going to pick up and whether the interest rate cut will be able to kickstart another round of loan growth as well as credit cycle. If not, then probably we might be reviewing on our view on the Chinese economy.
Hey, Benjamin here again. I have a couple of questions on the US oil rig count coming down compared to last year. Right, so I'll give you a couple of pointers with regards to that. Right, for the US side, actually when we're looking at it, we are looking at the WTI prices. Right, so the falling oil rigs is one factor that will affect the overall supply going forward. Right, because the number of oil rigs are basically a leading indicator of the amount of oil that can be produced from the producers over there. So currently, if you look at the the rig counts that we have seen, it's been down about 50% since November last year, right? So earlier on this year, when the numbers started coming down, people were puzzled as to why the supply of oil has not started to come down, right? Because some of the rigs are being taken offline, the less efficient rigs, right? So focus is put more on the higher producing oil fields, right? So currently with rates coming down, no doubt going forward, production numbers should start coming down. I think we have started to see that come down slightly. The last two sets of numbers that were released by EIA in US, right? So other things that we look at as well is the overall US inventory level, right? So earlier on in March, we expected that the inventory level will start going up in April, but it will start to be relieved coming into May. All right, so indeed, as we approach May, but we see that the overall inventory numbers as well as production output, the pace of it has started to come down. All right, which reflects the pickup in demand, which is seasonal going into May. Right, we are approaching the driving season in US currently. Right, so this is when the demand will start picking up. So if you look at the demand side, we look at the amount of percentage of utilization by the refineries. So the activities have started picking up. All right, back in March, late March, it was about 87%. Currently, the hovering around 94, 95%. All right, so this is a healthy indicator that demand has started picking up. So this has been providing some form of relief to the oversupply issues. Right, so naturally, the overall excess supply that we see in the stockpile numbers will start coming down as well. Right, this has been largely the reason why we have seen that WTI prices has jumped about $5 to $6 since the mid of April. Right, so I hope that gives you a better view on and of the current ongoings within the WTI space. Thank you.
Hi, this is Vincent. Oh, there's a question regarding Indonesia, whether we should invest into Indonesia-related stocks or wait for weakness. Um, just to follow up on the presentation in late April, where there are some development in politics in Indonesia, where there's some risks there, and currently Jokowi is hinting on some cabinet reshuffling. That might actually brought some uncertainties in the economy as well as instability in the equity market. So, and as well as some risk in the business environment. So probably you might wish to hold on to that first, and probably you can reconsider whether you are invest into Indonesia after the probable correction.
Hi, Benjamin here. We have a question here on if Indian rupees weaken significantly, what's the impact on Savin's outlook? So usually if Indian rupees, if you have seen the events have unfolded in 2013, the ending portion, right, where Indian rupees weaken significantly, usually that has a negative impact on Savin's activities, right? Because it's not because of the direct impact of rupee depreciation when you translate the sales numbers, because within the diamond industry, transactions are all put together with US dollars, and in fact, if US dollar appreciates and the cost, which is the cost of the manufacturing industry, which is paid out in rupees, there will be a positive impact. It's just that with regards to the movement of liquidity when rupees depreciate, that's the one that causes a problem, rather than the absolute translation of sales numbers, right? Because as rupees depreciate, right, there's some restrictions on how much the money can flow around within the financing facilities for the manufacturers. That's when we see a drop in manufacturing activities. Right, so currently, at least for the rupee as well as the rupee versus the USD, right, the outlook is pretty stable currently, as people haven't seen. So the pressing issue now would not be on the rupee situation, but rather than that, we are looking more towards the broader industry dynamics that have been unfolding. Right, so it'll be a quite a good show to watch over the next couple of months, right, with regards to how the situation might turn around, right. Hi, back me again. There's a question on the transport sector. So yeah, if you guys been following the news, there have been some developments with regards to the land transport sector, right? So our analyst Richard has actually issued a report earlier today on his views. Right. So the question here is with regards to UK company winning the bid over the weekend, what's the likely impact on SMRT? So currently, from at least in Richard's opinion, which is not he's not here today, all right, the overall impact is not negative, right, for the land transport sector. In fact, introduction of competition will be pretty good to the land transport area side. Right, so I think for him, he did not factor in the winning of this tender package for the Bullion bus package the previous time round. Right, so in fact, with the SMRT and ComfortDelGro actually put in a lower bid, but they did not win this bus package, right? So which is overall good for their margins, right? Because at the bid that's been won, all right, bus operating margins will be around 9 to 10% as compared to currently. I think for SMRT and ComfortDelGro, they're operating around 3 to 4% operating margin for the bus segment. Right, so overall, it's a pretty good impact. So going forward, we look forward to seeing what kind of bids are being put through for the rest of the bus packages, which should be 2 to 3 this year. Right, so for any more further questions on that, we'll invite you to tune in next week when Richard's around. He'll be able to provide a better flavor of what's going on, right, and his views on that. Right, so currently, for any further questions, we'll advise you to refer to the report that was issued this morning. Right, thank you.
I think for OSIM, the biggest concern is actually their sales growth. Because if you recall last year in 3Q, or rather prior to 3Q, they had about 23 quarters of growth. And last year 3Q was the first time they had a reduction. And this time around, the reduction is quite significant as well. And this is the second year-on-year sales down since in the last 3 quarters. So I think our biggest concern for investors and for the company is how can they turn around the sales in China in particular. So TWG is growing, and they have mentioned that they are looking to open about 15 stores by the end of the year. So that's about a 30% increase from the current store count. However, the concern is that TWG does not, or the OSIM is the one that actually brings in the biggest chunk of revenue. And with the new massage chair that came in sometime in April, it may be the first new massage chair that they come out since 2014. But the concern is how much can it actually boost up sales. And given that there's only about 9 months left in the year, we are quite cautious in terms of the contribution that it can bring in. So that will be our main concern.
Hi, Benjamin here. I'll take on a couple of other questions as well. So, we have a question on the earnings outlook for M1 in view of potential competition from the fourth telco. Currently, the fourth telco is in bid. So, of course, within the telco sector, there has been quite a lot of happenings that we have seen like over the last 1 month or so. So, currently, our telco analysis is not with us, right? So, in terms of the earnings outlook for M1, should there be potential competition, will of course be a negative. But M1 is more of a pure play on the Singapore market side. So if there's an entrance of a new competitor, there will be loss of market share. So definitely you'll see quite a significant impact on the front. And also depends on how aggressive the fourth telco will be. So for us, we actually met up with Capital TNT right recently, and Capital TNT owns 20% of M1. So currently, even on their side, they are a little bit cautious on the investment of M1, right? Considering that the outlook for M1 will be the worst compared to Singtel and StarHub, right? So that'll probably be our house view on M1 currently, right? And then I have another question on our view on Brent crude. Right, so last time around, our views on that were largely more on WTI. So on the Brent side, it is currently an oversupply of about 2.5 million barrels across the world, right? As the OPEC countries have been ramping up their production, especially for the Saudis. Right, so about 2.5 million barrels of excess supply of oil for the Brent side, right? So largely the movements in Brent, alright, has been affected by the situation that's unfolding over there in the Middle East. Every time bombs are being dropped in Yemen, we see that the Brent prices actually surge. But overall, the ramp up in production for the OPEC side, at least for our opinion, is that as we approach the hotter season side, a lot of the increase in domestic production is largely used for the domestic consumption rather than being shipped out. So the excess supply is actually fine, right? Because it's going to be used within the Middle East countries itself, right? So overall, our view on the crude prices for Brent and WTI is positive, all right? going forward for the course of this year. It's just that if the prices move too quickly, right, above $70, we might start seeing activities picking up in US as well, right? Because a lot of the shale players were actually shut down. Were shutting down activities when the prices were low. All right, as prices start coming back up, there is a risk that more players might start opening their oil wells, all right, increasing the activities over there in US. All right, so that will be a potential risk if prices move beyond $70. But as of this point in time, for the Saudis, their comfort level is around $70 per barrel, right? That's for the Brent side. So we are pretty close to that already. Apologies for the sound disturbances over the microphone. Right, a little bit of issues with the mic today. Right, I have a question with regards to whether we cover bigger tech or QD vascular, and whether we start covering these two. We have our own selection criteria for covering or not to cover. Bigger tech itself is still largely a shell company at this point of time. Alright, so for us, we did not see any catalyst with regards to this company. At that point of time, dividend yield was fantastic because they were disposing of quite a lot of their businesses. Alright, but of course, with the downturn in the oil market, they did have some impact to their remaining business. Alright, for them, they actually wanted to increase their investments into perhaps producing, right, lift boats, if I'm not wrong, right? So last time we met them, right? But as to whether it takes off or not at this point of time, right? The market is quite down for the offshore marine sector over here. So the risk of taking off might not will probably be negative on that part. They have a lot of cash on their balance sheet, but it depends on how they're going to spend it on, right? So for us, we did not see any catalyst on that front, so decided not to cover bigger tech, even though the balance sheet was looking pretty healthy, but it's still almost like a shell company at this point of time. Yes, as of this point of time, leaf boats are all for shallow sea or self-elevating units, if you like to call it. So, follow-up question on the leaf boats part. So, whether leaf boats will be the least impacted of the oil and gas play for this region, right? If you look across the board, yes, shallow waters will be less impacted, right? But when you look when we look at the various industry dynamics that are unfolding right now, right? A lot of the oil majors, it's almost like a knee-jerk reaction when they come in and they request for cuts to the day rates. So that will be one of the key issues that we see. So some of the players in Singapore, the contracts have been locked in at 3 to 5 year periods. All right, but of course there is a risk that if the day rates do come down significantly, all right, we will see some renegotiations on that front, right? But if you're exposed more to the production side as well as the repair cycle of the offshore and marine sector, these activities will start coming back, right? Because a lot of the oil majors were delaying such repair activities earlier on this year as well as end of last year, right? So usually for this kind of repair maintenance activities, you can only delay for up to 6 months. Right after that, because of regulations, you have to start servicing all these offshore production rig platforms, right? So repair activities will start coming back. right? For some of these companies, they are exposed to production and service, the service segment for offshore and marine. All right, so first quarter wise, there will be some players which supply offshore support vessels that might be affected by the rate cuts as well as the drop in demand. But going forward in the second quarter, we should see these activities start coming back. You started seeing indications that I mentioned earlier, the because after the 6 month period has ended, right, repairs activities will start coming back. So chartering activities might start picking up. Right. So for the lead float side, back to your question again, um, there will be a risk that day rates might be cut. But at this point of time, we have not seen it yet for the Singapore players. Right, so we'll keep a lookout for that as well as whether contracts being rolled off might be renewed. Okay.
Okay, this is Vincent, your macroeconomist. So there's a question on what are the current bright sparks in the world economy now. At the moment, we can see that the data from US is actually weaker than what we have expected, and they have actually hold on to rate hikes at the moment. And our in-house view would be probably they might raise it at the later of the year, probably in end of Q3 or probably early of Q4. Meanwhile, in Eurozone, the data is actually better than expected. The economy is actually gaining traction and is recovering faster than what we have expected. And they have actually outshined US for the past quarter. Then for the Asia ex-Japan side, China, as mentioned earlier, due to the weak data, we have expected that there will be more stimulus measures coming in, and they have indeed cut the interest rate during the weekend. And we will have to wait and see whether that will trickle down to the real economy and whether the real economy will pick up from there. As for India side, India has actually experienced a correction in their equities market due to a new tax policy that they have implemented, and they've actually they had some um, tax policy change where they imposed taxes on those that on companies that they have not, especially in the foreign companies which they have not taxed before in the past. So that actually caused quite a lot of foreign investors to retract their funds and put the capital into the North Asia side, especially in China, South Korea, as well as Taiwan. So anyway, just to sum up our in-house view on the macroecon side, we are actually still overweight on US, neutral weight on Eurozone, overweight on Japan, China, Hong Kong, we are still overweight, and India as well, we are still overweight on them. Meanwhile, we have actually downgraded last month for Indonesia side from overweight to neutral weight, and for Thailand, Malaysia would be on underweight. Sorry, just to repeat, on our rating on for US, it's still currently overweight, especially on the consumer sector.
Hi. So if there are no further questions, we'll end our webinar today. Thank you.